June 12, 2026. The biggest IPO ever. $75 billion raised. SpaceX goes public. 3 days later, euphoria. Stock hits $225, a 67% gain. Nobody had seen one earnings report. Then it started falling. 14% gone in 48 hours. Some investors are underwater. Should they have seen it? Let's break down the crash. SpaceX filed in April. Confidential at first. Public filing, May 20th. Then something unusual happened. No price range. Just one number. Take it or leave it. That's not how IPOs work. Elon Musk dictated the price. Order books closed June 10th. 4 times oversubscribed. $250 billion in orders against a $75 billion raise. The demand was real. The hype was bigger. Goldman Sachs led the offering. Musk kept 82% voting control. He controls SpaceX completely. Public shareholders get almost nothing. No say in decisions. That's not a typo. That's the actual structure. Retail investors got 30% of shares. That's $22.5 billion to retail. Regular people bought in on day one at $135 without reading the fine print. The fine print is the whole story. Here's what SpaceX actually makes. $18.7 billion in revenue last year. Total. The valuation at IPO price, $1.77 trillion. Almost 100 times revenue. Most profitable companies, 20 times. SpaceX isn't even profitable. Net loss, $4.9 billion. In 2025, the year before going public, where did it go? One word, XAI. Musk merged SpaceX with XAI. XAI burned $6.36 billion. Starlink made $4.4 billion profit. The AI division erased it. Q1 2026, another $4.28 billion lost. Rockets and satellites, profitable. Artificial intelligence, bleeding cash. The market priced in dreams. Here's what most coverage missed. XAI had 11 co-founders. Every single one left. Before the IPO happened, all 11 gone. Musk said it himself. March 2026, in public. Not built right the first time. His words about his company. Most of the valuation upside. No original founding team left. Until the stock started falling. Friday, June 12th. Trading begins. Opens at $135. Closes at $161. A 20% first day gain. 500 million shares traded. Nearly Facebook's 2012 debut. Monday, stock climbs again. Up 20% more. Now above $190 a share. Market cap, over $2 trillion. Wednesday, still climbing. Thursday, the peak. $225.64 per share. A 67% gain from IPO price. 3 days of pure euphoria. Then, Thursday afternoon, reversal. Stock falls 3.6%. Friday, falls again. 2-day decline, 8.3%. Investors who bought at $225, underwater. They bought 3 days in. Not everyone was surprised. CFRA initiated coverage immediately. Rating, sell. Price target, $115. A 29% drop from Friday's close. Extremely ambitious growth strategy. Morningstar went further. $63 fair value. Not $135, not $225. $63 per share. He called it overvalued. A finance lecturer noticed something else. A lot of promises. What are they based on? The prospectus skipped governance details. One investor called it different. Trades like a meme stock. Not everyone agreed, though. New Street Research, $165 target. A 10-year lead on competitors. Here's what most coverage skipped. Right now, only 4% of shares trade. The other 96% locked up. Until December 2026. That's called a lockup period. When it expires, everything changes. The tradable float expands from 4% to nearly 58%. 14 times more shares available. That thin float drove the price up from $135 to $225 in 3 sessions. When the lockup ends, reverses. More shares, same demand. One analyst's prediction, $137 by mid-2027. The entire gain potentially gone. Musk's lockup, June 2027. So what really happened here? A company priced on belief, not on current earnings. $18.7 billion revenue, $1.77 trillion valuation. Musk projected $1 trillion revenue by 2030, up from $18.7 billion. That's the story being sold. Maybe it happens, maybe it doesn't. September 2026 earnings, the real test. First real test as a public company. Until then, nobody actually knows. Not the bulls, not the bears. Just people making educated guesses. The biggest IPO in history. Up 67% in 3 days. Down 14% in 2. Locked shares. Hidden losses. Founders who quietly walked away. This is what actually happened. Not the headline, the mechanics. That's the story behind the story. That's the trade behind the trade. Leveled up. Every financial story unpacked. If this helped, subscribe. Next breakdown dropping soon.